All right, guys, welcome to the Buff Show. Today we got a market update for you. We got
Austin Yor.
And I'm Ben Larson.
awesome. So every month we do this. We're reviewing last month's numbers. So today is February 15th.
So
yeah,
we're-
yesterday was
we're-
Valentine's Day.
Right, yeah. we're reviewing the last full month, so we'll be reviewing January.
Yep. So real estate always lags, but this is good data, just giving you an update on where things are heading. So it's kind of a slower moving beast, but we're a month behind it. So
We shouldn't be too far off these
not.
numbers, though, right?
no.
Not that much has changed in 2 weeks.
No. And in a few more weeks, we'll give you February. So
Yeah.
today, this is pulled today, active on the MLS. Last year, February 15th, 2022, there were 1,696 homes active on the market. Today, drum roll, we got 6,935 homes on the market. So we're up 308%.
Wow.
Yeah. A lot more listings, which is good. Like, I'm excited for this spring because buyers are going to actually be able to date around and check some homes out and see
Right.
which ones they like.
I think a lot of that too is not just more people selling their homes. I think a lot of that comes from growth in Utah as well.
Yeah.
That's
Yeah.
true. So, but why? Like, there's growth, but what else accounts for triple the amount?
Oh,
of-
well, rates crushed us. And so I think there's it's definitely cooled the market down and pulled it back. So
Mhm.
we're seeing a lot of buyers that would like to be able to buy, but they got their budgets cut in half. And so now they're sitting on the fence waiting for things to change.
Sure.
So, and we should throw in there today's interest rate. If you were to go out and get a conventional home loan, you're mid 6%. It actually just went up. So it was coming down and we just saw a little bit of a bump up, but you're right in that 6 to low 7% range. Under contract homes. So last year, there were 7,150 homes under contract today of last year. Today, there are 4,488 homes under contract. So that's a negative 37% change.
More homes on the market, less being sold.
Exactly.
Yeah, so what would that do to pricing? We'll talk about median sales price. So let's go all the way back to 2021. January of 2021, here in Utah, our median sales price was $379. Last year, we all know, was crazy, a lot of appreciation. So January 2022 now, it bumped all the way up to $485, okay? Today, or I guess January of this year, we went back down slightly to $455. So there was a 6% decrease from January of last year to this year.
Yeah. And we need to, so we have average and median.
Yep.
And
We just
They're
had an
different.
argument about this.
yeah, because we're which number do we like? Personally, I like the median. Median's taking all of the homes that sold and finding the one smack dab in the middle.
Yeah.
Average is taking all the homes that sold, adding up their sales prices, dividing it by the number of inputs that there were, and then whatever that number is the average sales price.
And if you want the average, it decreased by 6.2%. So it's basically the same thing
Yeah.
as the median stat, but
They follow each other as far as on a graph, but the actual numbers are a little bit higher on one.
yep.
Yeah, averages are a little bit higher, but that's if you have a $40 million home that sells, that volume or amount is being taken into the equation. Median is more just kind of the trending middle unit one.
I like how you described it for me. It's like if you lined them all up and you just whacked one off each end until you got to the center.
Yeah,
That's how they
and
taught us in
median.
school.
Yeah.
Just cross them off with your pen.
Yep.
I think something else to note with median sales price is if you take out 2022, you just compare 2021 prices to this year's prices, we're still up quite a bit. So from $379 up to $455,000. So the Utah market is appreciating despite this little bit of depreciation we just saw. If you look at the longer trend, it's still upward.
Yeah.
Correction. This little bit of correction that we had. We had 2022 was that anomaly that
Yep.
just broke the bank, broke the records.
Mm-hmm.
Now we're coming back into a little more of a reality.
When I think interest rates are pulling us
Are
into that.
battling it into
Yeah.
that. They're doing what they're supposed to do. They're supposed to
Right.
bring things back into perspective.
Yep.
Right.
So right now I'm looking at days on market until sale. So the average number of days between when a property is listed and when an offer is accepted. So once you go live on the MLS to when you accept a contract. So what's interesting on this, we're up at 63 days of January 2023. The last time we were over 60 days on market was in 2016. That was a long time ago. I mean,
Wow.
that's been 7 years since we've been an average of 60 days on market. So it's stuff sitting a little bit more. It's just cooled down. These interest rates are the same thing, just kind of making people think twice. People are unsure. Stuff's still moving. It's just taking a little bit longer to get there. So keep that in mind. If you're going to list, there is those anomalies out there that are still moving and kind of being quick. We'll get into that later on.
Some
How
stories.
some stuff's kind of moving, some stuff's sitting, but your average, you're going to be a little bit longer.
Yeah. And I think a lot of people compare to the last few years and they're like, why isn't my house selling? Keep in mind, historically,
I don't know if you can see this graph. We'll kind of put it on our website and
Pull it
stuff,
to the
but
side here.
yeah.
but historically, this yellow line's your 60-day mark. 2016 here. Here's where we are today. Historically, I mean,
About
60
average,
days
right?
is about average.
Yeah.
By the time you
somewhere in there.
list, you go through negotiations before you actually accept a contract. So
But in the early 2000s, like 2010, even when the market was super hot, 2007, 8, you were on average 80 days on market even then.
Wow.
Even in 2007, you were just under 60. So like what we've seen in the past is unprecedented, even in like the boom of before the Great Recession, which is interesting. So in 2011, homes were sitting on average of over 100 days on market. So just
Right.
keeping that in mind, 60 days isn't a bad thing.
Yeah.
right, it's more than the average the last few years. Like I said, don't freak out. Like,
Right.
this
Just
is an
plan
av-
for it.
Yeah.
So I think most people see that and they're like, oh, it's a buyer's market.
Right.
It's for sure a buyer's market.
Yeah.
And,
I
mean,
jumped to that conclusion because I'm ready. Let's do this.
But again, historically, 60 days isn't really that crazy.
No. Okay, I got closed sales. So this is the count of the actual sales that closed in a given month. So this is counting all the sales closed in January. So we're going to go back to January 2022. There were 3,193 homes that closed in January. January of 2023, there was 2,019 homes that closed. So about 36% less that closed in this year.
I wasn't listening to a thing you just said, so I can't comment on it. I was studying. I was studying
looking
my.
at your
I was
next
studying
one,
my
weren't you?
topic to really.
Well, there's not a whole lot to
Right.
comment
No,
on that one.
no,
So,
that's good. Percent of original list price received. So in January 2021, 100% of lists got their ask price, right? So if they list on the MLS for 500,000, majority of the time they got 500,000.
100% of the time.
yeah.
Well,
There's a few.
it balances out. There's a few that don't. There's a few that get over, and it comes out to be getting what people originally list it for. That was 2021. Okay, so 2022 again, market was hot. So what do we guess happened? People got over their original list price. So now today, what has happened? It's come down. So 93.9% of sellers are getting what they're listing for. So more times than in the past, people are undercutting or trying to get away with a lower offer price.
And I don't think that includes seller paid concessions. That's just
True.
like bumping the price. We're seeing a lot of
Just-
people
yeah.
like throwing concessions and stuff. I think this goes back to I think sellers could maybe get a little bit more if they were willing to wait on the market longer, but there's a lot of fear in the market and we don't know what's going to happen. Rates are adjusting things, so people, and I don't blame them, people are trying to get out of a situation quicker than like waiting and just like waiting for a higher offer because time is money and it's hard to say where things
Yeah.
are going. Like we were seeing rates drop back down, but they just bump back
Right.
up. Every little change like that affects us drastically. And so there's a lot of fear and insecurity in the market, but it's good to see some wiggle room in there. I like seeing some longer days on market. Like it slows down the speed at which the game of real estate needs to be played at. And it's really not, you don't want to put somebody in a situation where like, hey, you just saw this house, you loved it, you need to have an offer in by 5 p.m. today and make a decision. And then it's just too fast.
It's
So-
too important of a decision.
Right.
I mean,
So we're slowing things back down, which is
Yeah.
good.
the last time that people undercut prices as much as they are today was back in 2012. So it's been a long time since people have not been offering that full ask price.
That's interesting.
Yeah. So for clarification, this is the percent of the original list price received. So it's not how many times sellers are getting their full offer or ask price. It's how much of their ask price they are getting. So for example, $500,000 home, they're getting 6% less than $500,000, which they would have back in 2021.
That makes sense.
perfect.
Thanks for clarification.
You're welcome.
So I've got the month's supply of inventory. So this is an indicator of what is a buyer and what is a seller market. So if you have 6 or more months of inventory on the market, it becomes a buyer's market. If you have 5 or less, it's actually considered a seller's market. Right now in January of 2023, we're sitting at a 2.6 months of inventory. Last year in January of 2022, we were sitting at less than a month, at 0.9 of a month's supply of inventory. So right now we are still technically in a seller's market. I succeed.
Are you saying we need to triple our inventory to become a buyer's market?
Right now we need to double it
Wow.
to become a buyer's market.
Okay.
Gonna happen. I'm predicting. I'm predicting it.
I don't know about that. We'll
So
see.
did you say what the definition of month's supply of inventory?
So the month's supply of inventory, the inventory of homes for sale at the end of any given month, divided by the average monthly pending sales of the last 12 months.
Okay.
So basically, if something's under contract and pending, we take that for the last 12 months and divide it by the inventory of 1 month is the supply of monthly supply. So
yeah, so it's a good indicator of like where we're at, where we're going. But yeah, you really need six months supply or more to be considered a buyer's market. Which I think people are like, oh, we're in a buyer's market, and like, no,
Yeah.
things are still pretty hot,
Yeah.
which we'll get into later.
Well,
I think
yeah.
a lot of that, like you said, is that fear that's in the market is it's helping on both sides. You know, whoever basically has more cojones. Is you're the seller and you're more bullheaded and your situation doesn't need you to be fearful, then you're a seller market on your deal. If
Yeah.
you're a buyer and you can just willy-nilly as you please, you got a stronger buyer market.
Yeah. I think they're comparing like days on market too. They're like
Yeah.
they're looking at last year where things were going so quick compared to this year, but that's all relative. Like they don't know what the average is. They're just comparing last year to this year.
Well, that's how most people operate. It's
Right.
like our
Right.
interest rate's really good right now, and you're like, well, what are you comparing it to? Are you
Right.
comparing it to 30 years ago when they were like 12 or 14%?
Yeah.
And if you were, you'd be like, heck yeah. But
Yeah.
if you're comparing to last year, you're like, not so good. So
Yeah.
it's all relative. So
yeah. So housing affordability index. So I'm just going to read this definition because
Okay.
it kind of confuses a lot of people.
yeah.
But this index measures housing affordability for the region. For example, an index of 120 means the median household income is 120% of what is necessary to qualify for the median priced home under prevailing interest rates. So a higher number means greater the affordability. So when we put that into our market, back in 2021, that index was at 122%. Okay? So more households could afford that median sales price. Last year, it dropped down from 122 down to 99. We're now sitting at 83%. The reason I believe that is because we do have lower prices, right? We just said that we came down 6% on our prices, but interest rates came up to more than offset that 6% decrease. And so now it's that much less affordable compared to what Utahns are making their income.
Yeah. I do think, though, if you're a smart buyer, like Austin and I did another podcast about how right now you can pick up homes. Like, for example, my brother's trying to buy a house, and they were looking at houses in Bountiful, and I'm pulling comps on this. And normally we'll go back a year. I was only going back like 6 months. Or sorry, I'll look back like a year, but you'll really only use comps like within 6 months.
Yeah.
But even 6 months ago, we were seeing this same house sell for like 500 to 550, and now they have it listed at like 438,
Wow.
and he offered like 430 or 425 or something like that. But it's crazy. So like you're talking almost 100 or over 100,000 if they get that second offer. But depending on where you're saying like this is the exact value of it last year, I was saying roughly 500 to 550, but around $100,000 less in a matter of 6 months. Rates are higher, but there is a buyer last year that paid, 500 or 550 for that same house.
Yeah.
So I think if you're a buyer right now and if you play your cards right, look for the right deals, find the right sellers, you can find deals a lot easier that are as affordable if not more affordable than last year, even though you're paying a higher interest rate because you can get a better deal on the list price. There's so many sellers out there that think my house hasn't sold in 2 weeks. We need to fire sell it.
Yeah.
Or we need to get out of this. And I think that's starting to change. We're going to start talking about what we're seeing right now. But if you find the right deals and the right setup, you can really get into some decent properties right now.
I think that goes back to that percent of list price received that we just talked about, right? So there are needles in the haystack out there, but there's like more needles in the haystack now.
Right.
So you can find them.
You just
They're
have to
still
look.
hard to find, but
Yeah.
there's more times than there used to be a deal out there.
It's almost like it's starting to turn into a buyer's market slowly.
One could say that.
More needles in the haystack. I don't know.
Yeah.
I like it. I
don't know.
like it.
I don't know.
So all three of us actually have bought a home within the last 6 months. Austin has one under contract right now. Ben's renovating one, might flip it, might rent it. But I wanted to go over what we're seeing in the market. Like, we're all working with buyers. We have listings. I'll start first since I'm talking right now. So the past month, we listed a house in Mountain Green. I wasn't sure how the market was going to react. We were listing it in January. There was a ton of snow. Just it's kind of like the lull of the market right after the holidays. It seems like January and things slowly start to like increase and pick up. This was a $1.2 million house, but we ended up getting one. We got our marketing and everything perfect. We had stagers, video, 3D tour, just like the perfect storm. We sent out postcards to all the neighbors, letting them know about the open house. Yeah, so we sent out postcards to all the neighbors, 150-ish, and just marketed this open house. We held the open house. We had like 9 groups come through, a few private showings before. It seemed like we had a ton of interest, and then we ended up getting a handful of offers come in on that. It took a little bit longer. Like, sometimes you'll have the open house and like that night you'll have a bunch of offers roll in. These didn't roll in until like Monday, Tuesday, Wednesday the next week. But
Took a little bit longer compared to last year.
yeah,
Okay.
yeah. But I mean, still, it was great for like what we were shooting for.
Yeah.
I wasn't sure. And we ended up just closing on that. We locked in a cash buyer and it closed, and it went quick. So
Seller concessions or anything like that?
No.
Just full.
yeah,
full
full
offer.
press. Well, we had other people like interested in backup, so like that gave us some leverage to combat those. Another story had some other buyers looking at this other property in Wasatch County. And this was kind of funny. We were one of the first ones to go through it. This is everything they'd been like wanting and looking for, but we went through it, and they always had like, this was priced at like $600 a square foot. So like it was really expensive.
Yeah.
And it was only 2,000 square feet. So they were at 1.2. Just felt like a lot for like a 2,000 square foot. I think it was 2-bed, 2-bath like place, but it could be rented nightly. Like, it was in the perfect location, perfect zoning. And my clients, I think they were feeling that the market was not as competitive as it is. We got an offer in, and we had a few counters go back and forth just on little terms. They ended up wanting to sleep on it a little bit longer, and then that night they ended up getting 2 other offers, and it went under contract. So it's interesting how, and I've told a few people this, because they went from like thinking they were overpaying to seeing more offers roll in, to them being like, hey, we would even possibly pay more for this. And all because of the market and what they're hearing. The news is saying we're in a recession, but then some homes in Utah like are still just fiery hot. So I wanted to cover that today so we can talk about what we're seeing. Like Michaela was just saying, Saturday she went to an open house, and there were like 9 groups there going through the open house. Like, we're in February.
Yeah.
It's like a $500,000 house, but 9 groups, that it reminds me of last year. Like, I think we're going to see like this little heat up. People are sick of waiting. Like, there's a lot of people just sitting on the fence, and eventually people are going to be jumping off the fence. And spring's always like a bit of a
Frenzy.
Yeah,
Right.
I think
mad dash.
I think we'll see some of that.
Which is that's super interesting. Is you try to figure out what's going on out there. I mean, Peyton's had these 2, over $1 million homes, and I had one recently that was around a $500,000, about 550, and it sat for a long time, and we had tons of people come through it, tons of interest, but no one was really pulling the trigger. We were on a little bit earlier than you,
Yeah.
a little bit right in that the raise of interest. And we're sold and under contract. We went FHA on that one. But it's weird how it's just some dynamics are hitting better than others. And then in a different area, those same dynamics, like with Michaela, she had that one, it was under 500 and it went like crazy.
Right.
But where yours were over $1 million and then it went like crazy.
It still went, yeah.
If you switch those properties, are they going to go? It's just this kind of strange limbo. And I think once that ball starts rolling, like Peyton said, I think you're going to see a lot more activity happen. But I think a lot of anomalies are happening right now.
Yeah.
I think this market's super interesting because just when you think that buyers have some leverage, it doesn't happen that way.
No.
Like, for example, we went under contract on an investment property. We did full ask price, but then we got 10 grand off seller paid closing right away. We went through inspections. We got another 10 grand off for things that were uncovered during the inspection. So we're 20 grand off our original price. And so you'd think, oh yeah, buyers can ask what they want. They can do whatever they want. But then you go to these scenarios, and I have one. I was thinking, oh yeah, I've got some clients. I'm like, yeah, we'll do the same thing. We'll go in. We went a little bit above ask price actually. Went through the inspection. Some things popped up that could justify a $15,000 seller paid closing. And so that's what we did. And they were like, no way. Are you kidding me?
Get out of my face.
They said $2 grand. We'll do $2 grand. I'm like, okay. So that was a completely, it's like the same time frame,
Yeah.
but a completely different outcome.
Yeah, it just depends on the seller and the property. And like even on listings, some you'll be like, oh, this one will go in 2 seconds. And it doesn't happen like that. And others, you'll be like, this one's going to be a hard sell. And then next thing you know, it's like gone in 2 seconds. Like that, the Mountain Green one. I'm like, I don't know. Like this, I told the sellers, like, be prepared. This could sit on the market for a minute. And sure enough, like it went quicker than I anticipated. So you just never know. But if you just got to get like all your pieces set up right. If you're a seller, like get everything dialed in perfectly, have the right strategy, and then be willing to wait longer if you need to. If you're not willing to wait, price it accordingly so you can get out if you need to. And then if you're a buyer, like it's a great time to be a buyer. There's way more inventory. Like sellers are being a little bit more flexible.
Great to hear that, Austin. Great time to be a buyer. Almost like it's coming to be a buyer's market one day.
Yes. But as an agent, I would say to buyers, there's potential. We can get you something back. We can get you some seller paid closing, negotiate a little bit, but don't expect it. Like we just talked about, there's still properties out there that are going to expect what they're asking for and no less. So it could go either way, but
And I'm anticipating that it's going to heat up a little bit more. Things will start moving. You'll see more multiple offers as more buyers start coming out into that spring fever and buying season. You'll get more inventory, but we're also going to have a lot more buyers come out, like wanting to move when things are warm. Like not a lot of people are wanting to buy homes right now, but come 1 or 2 more months, you'll see a lot more activity happening.
Well, and we haven't talked about this for a long time. You heard it tons when the rate started going high. Date the rate, marry the house. But that's really becoming a thing now because now your prices are getting softening. We've seen it. We've dropped, what did it say, 6%?
yes, yeah.
So these prices are dropping. We're having a little more negotiation. People aren't as happy about that higher interest or that higher payment, but they're finally seeing like, okay, now this price has come down. I'm going to refinance. When rates drop again, whether it be 2, 3, 4, 5 years, they're still seeing that huge lump of money pays off in the long run. So,
well, and one other thing I want to cover is lenders and sellers are like starting to like, hey, and builders. Everybody's like, hey, we'll buy down your rate. So they're offering money towards your closing costs to buy down the rate. Or there's something called a 2-1 buy down where you can actually have the seller pay for prepay your interest down. So your interest rate the first year is 2% less, as if it was 2% less. And then the second year it's 1% less. And then the third year you either refinance or just pay it. And if you sell that house early or like 6 months after you buy it, then all that money that was prepaid, I thought you would just lose that, but it's actually applied towards the principal of like when you sell.
Basically, it's like they're buying you a buffer on that gamble of the rates going down.
Yeah.
So it's giving you a year at 2 and a year at 1% less on your gamble.
Yeah.
So that's essentially what it is. You're buying high rate and you're hoping that you can hold on to this until the rates drop, then refi.
But it's a great strategy. So you have all these programs and things making it more affordable. That's a big deal for a buyer that
Oh, yeah,
is
huge.
getting a new job or moving, and like
Yep.
after 1 year being in the house, like most people they get settled and then they can pay more the next year and more the next
Right.
year if they had to, or rates just might be lower and you could refinance altogether.
There's a big difference in what you can afford and what you want to afford. So
Right.
yeah, I can afford $2,500 a month, but you know, we just had a baby this year and we just did this. We don't want to pay that.
There's
So,
a
like-
recession looming that I need to be saving up for.
Exactly.
Yeah.
But then like that 2-1 buy down, that's a 2-year buffer. That newborn baby, it's not a shell shock anymore.
Right.
It gave you 1 year at 2%, and it gives you that buffer zone to
What-
breathe.
Yeah. What's cool is it feels like everyone's on the same team. Like sellers know if they want to sell, they need to offer these things, and lenders as well. If lenders want business, title companies. Whereas last year it was like, oh, if you're a buyer, tough luck. Like
Yeah.
I'm gonna sell for what I want, and I'm gonna make a lot of money. But yeah, today everyone's like, let's help each other out so we can move the market.
Yeah, and builders too.
Yeah.
Like, it's just nice. So let's end with like words of advice for buyers and then sellers.
Yeah.
We'll start with you, Austin.
I sure don't want to start with Ben.
So the biggest piece of advice for me, just like I would in any interest rate, any market, if you're thinking about it, if you want a piece of this, do it. Just do it. Try it. You know, the worst case scenario, the bank's going to tell you no. Worst case scenario, budget will tell you no. At least you'll get a roadmap to where you're going to be. So if you're going to do it, just do it. That's probably a Nike.
I
infringement.
don't know if you
If
can
you're
use
gonna do
that.
it, just jump into it.
There you go. There you go.
So mine's the same way. Like just if you know what your goals and plans are this next year, like start researching, start planning. Everybody just says, "Oh, the market's this, so I can't do it," and they come up with excuses. But all three of us have bought a property in the past 3 months.
Yeah.
We're still doing it. Maybe we're stupid.
Oh, so I say I bought in the highest interest rate and the highest,
Yeah.
like the peak of the peaks, and I'm
Same.
still not mad about it.
Right.
Right.
Well, you hang on to it long enough, and you'll look back
Yeah.
and be like, "Dang,
Yep.
should have bought 10 of those."
That was
Like-
going to be my advice for buyers is I believe this is just a blip, right?
Yeah.
And in 2 to 5 years, you're gonna refinance. You're gonna be like, wow, I got a good deal on that house.
Yeah. Well, I mean, even if it was the Great Recession, the next Great Recession, if you can hang on to it, and it might suck, weather the storm, but everything you look back and you're like, dang, like if I could look back and if I had the means to buy 5 properties back then, and if I could afford to still hang on to them all throughout now, I would look back and be like, man, I was a genius.
Yeah,
I
you
way
wouldn't have been
Yeah.
mad.
I
Yeah.
way
Yeah.
overpaid then, but like if we could have the pricing, let's look at this is an interesting graph. Median sales price. This little bump right here was 2008. Like we're clear up here now. So, and I anticipate the next, unless the complete world structure in the U.S. economy collapses, which if it does, I don't.
We got bigger problems.
But
Yeah.
like on a doomsday level, because if it's just a minor recession, we're still. I mean, what is one of the only assets that does not tank in a recession? It is real estate.
Yeah.
Normally, real estate does not depreciate in a recession. Now, 2008, that crisis was caused because of real estate, so that's different. But normally, it holds its value.
Right. Yeah, and it always will ebb and flow. Like you'll see it up, you'll see it down, you'll
Yeah.
see it sideways. But it just, if you can hang on to it, like we're all in it for the long haul. And with that perspective, it makes it way easier because you only lose it when you sell money, or you only lose money when you sell. So if you can hang on to it,
Yeah.
you're
Yeah.
good.
Well,
It's like a stock. You buy a stock high and it goes low, you're not going to sell it and dump out of it.
Right.
Yeah.
You're going to wait till that stock comes back.
It's like my Bitcoin.
Yeah, except for cool thing about real estate, Bitcoin doesn't just disappear.
That's true.
That is true.
Oh goodness.
Well, hopefully there's been lots of good takeaways for you guys. You guys have anything else you want to add in there?
No, my last thing yes. My last thing.
No, but yeah.
My last thing would be a telltale sign of where things are going. If these major financial institutions are anticipating a recession, they're all forecasting it, but yet they're buying up real estate. Why do you think that is, right? And we just went over that. So,
Probably because the buyer market's probably coming.
yeah.
Good hedge. So, anyway, guys, hopefully this was helpful, and tune in next time.